Okay, now we'll start with some miscellaneous topics which are pending. So two miscellaneous topics which are pending is financial services and money market operations. So I'll start now with financial services, and then maybe after completing this, depending on the time availability, we'll move to money market operations. Now coming to financial services, this is effectively nothing but factoring analysis. So as far as factoring is concerned, you would have learned a little bit of it this at IPCC level as part of working capital management chapter. I'll then revise you with that. I'll take you through whatever you would have learned there. Just a minute. Okay, as far as factoring is concerned, what matters is what is the effective cost of a factoring arrangement. So this is basically a transaction where what happens is I have to receive some money from my customers. I give the bill to a factor. Factor will collect the money from the customer and then he'll pass on the money to us. Now practically what happens in case of a factoring arrangement is, please listen. In a factoring arrangement, on day one, I sell goods to my customer. I give the bill to the factor. Factor gives the money to me. If I've sold goods worth 100 rupees, he'll pay me only 95, 94, 93, 97, whatever is agreed upon between us. He will collect the money from the customer, and then whatever surplus is there will be left with him. That is his profit or whatever is commission for factoring arrangement. Sometimes some reserve can also be kept. If there is a reserve kept, that is for 100 rupees he gives me only 75, then when customer pays he will pay me the balance. This is as far as a factoring arrangement is concerned. There are a lot of benefits associated with factoring is you get some savings, time savings is there. You also have growth. You can avoid bad debt if you want to. So these are the benefits which are associated with a factoring arrangement. I can do more sales. The disadvantage with factoring is I'll have to pay him some commission. I also don't have better control on receivables. Now from a problem point of view, you will have to calculate something called as effective cost of factoring. In order to calculate effective cost of factoring, we first need to calculate what is the amount lent by the factor. So how it works is, let's assume sales is 36,500. For a year, sales is 36,500. 1 year, we are selling goods worth 36,500. Now, please listen. There will be a credit period with my customer. So, my customer credit period is 90 days. So, on an average, my receivables are expected to be 36,500 into 90 by 365. So 9,000 lakhs is the receivable. Let's assume this is in lakhs. 9,000 lakhs is the receivable. So on the asset side, I have a asset called as receivable. Against this, I need something in the liabilities side. Either my own money, or bank money, or factor money. So what factor will do is, he will say, okay, you have so much of receivables, I will fund you this. First thing he will do is he will deduct commission. So let's take that commission is 4%. So of this 4% he will deduct it. Then he will say I will also keep some reserve. So he will deduct the reserve part also. Reserve part, let's assume, is 20%. Then he says I can lend you this much. So amount eligible to be lent. Amount eligible to be lent is after deducting commission, after deducting reserve. So this is only is eligible. Then he says, okay, you are eligible to get this. I will also deduct something called as interest. What is the interest he deducts? 6840 into 18%. Let's assume the interest rate is 18%. Into, for a period of 90 days, he is lending money to us. Because beyond 90 days, the customer pays off. So only for a 90 day, he lends the money. So this is the interest he will charge and amount actually lent. So my factor, I am in need of 9,000 and he will give me 6,536. Balance I will have to arrange on my own. So factor will give me only this much. This is part 1 of the calculation. Credit sales, credit period, average receivables, less reserve, less commission, amount eligible to be lent, less interest, amount actually lent. This is what my factor is going to give. He is not going to give me anything beyond this. Any doubts in this part? Then the second part is calculating the cost of factoring. So benefits, cost. Commission is one of the cost. Interest is the second cost. Now how we calculate this amount is very clear. This amount which you see here is for a period of 90 days. So into 365 divided by 90. Into 365 divided by 90. So this is the expected commission cost. This is the expected commission cost for the year. In short, this will become sales into 4%. Because we are just from that period we take it. I normally do it like this. This is easier to do. Take the commission. This is for 90 days into 365 by 90. Interest into 365 by 90. This is the interest cost. So commission cost is so much, interest cost is so much. What are the benefits? When I arrange for a factor, I need not have any collection team. So collection cost savings, bad debt saving. Some factoring arrangement will be with recourse and without recourse. With recourse means bad debt is responsibility of the company. Without recourse means the factor will take care of the bad debt. If at all there is a bad debt, so I get a bad debt saving. Net there will be some cost which I have to pay after savings which I consider. So let's assume my net cost is 1200. Effective cost of factoring is 1200 divided by this. So 18% is the effective cost of factoring. Against this, if I want, I can take a bank loan which is 14%. So bank loan is 14%, factoring is 18%, I'll go ahead with a bank loan. If bank loan is 20% and factoring is 18%, I'll go ahead with a factoring. Clear? So there are two costs associated with factoring. One is commission, second is interest. Benefits is collection cost, bad debt saving, sometimes discount saving, lot of savings can be there. One important thing is pre-factoring you pay interest to a bank. We do not consider interest as a saving. Why we do not consider interest as a saving is after calculating the net cost, I compare whether this is beneficial or that is beneficial. Interest is paid at the rate of 12%. This is paid at the rate of 18%. So interest never comes in our calculation. Clear? This is the broad thing which we are going to do in a factoring arrangement. So effective cost of factoring you can see here. Commission expense as per working note 1 into 365 by credit period. Interest expense as per working note 1 into 365 by credit period. Benefits, administration charges savings, bad debt saving, net cost of factoring, amount lent by factor and effective cost of factoring. I'll do a problem so that you understand it better, but broadly this is what we are going to do for all the questions. Broadly this is the calculation we are going to do. Topic 37, question number 1. Okay, can we start? Working note 1, calculation of amount lent by factor. Working note 1, calculation of amount lent by factor. Amount lent by factor. Particulars, calculation amount. Okay, start with credit sales. We'll do this problem in lakhs. Okay, credit sales. How much is the credit sales? 320 lakhs. Credit period. We'll assume 360 days and do the question, otherwise it will be unnecessary rounding off. Credit period 90 days. We'll take 360 days and do the calculation. Which one? Receivables is 320 into 90 by 360. 320 into 90 by 360. 320 into 90 by 360. After receivable figure, less. First thing is commission. No, bad debt, why will you deduct? Bad debt is a saving for you. Factor will not be bothered about bad debt and all. He will charge it in the commission. So factor cannot say that there is going to be a bad debt and all. Commission, what percentage is the commission? So as of now it is calculated on receivable, 2% of 80. Percentage of 80. Then less reserve. This format remains the same. It will not change in any of the question. Reserve is how much? 10% of 80. Amount eligible to be lent. Amount eligible to be lent. Clear? Less interest. Interest will be charged for a period of 30 days. 70.4 lakhs into, what is the rate of interest? 18% into 90 by 360. Amount actually lent. So the factor will give only 67,23,200. Amount actually lent 67,23,200. Any doubts on this? Clear? Working note 2. Effective cost of factoring. Particulars calculation amount. Effective cost of factoring, particulars calculation amount. In particulars, capital A, costs. First one is commission. Very simple calculation. Whatever is there in working note 1, 1.6 lakhs into 360 days by, what was the credit period? For 90 days it was 1.6. What is it for 360 days? Into 360 by 90. Similarly, interest cost. Any other cost there in the question? Beyond this, you will not see any other cost unless there is something related to interest change is given. So these are the two costs which will be there, total cost. Capital A costs, then capital B benefits. Capital B benefits. Saving in administration cost. Saving in administration cost. My team need not administer the receivables now, so I'll have a savings there. Savings and administration cost. Then savings in bad debt. If the problem is silent, you will continue to have savings in bad debt unless they say it's non-recourse. Savings in bad debt. 320 lakhs into what percentage? 1.5 percentage. Any other benefit given in the question? So that is on that only is charging an interest. So we are trying to find out on this advance what is the interest. So the basic thing is he has given this money. By giving this money, he has charged us 6.4, 12.672. He has made us save 5, 4.8. Net, what are we paying him is what we are trying to calculate. So total benefits. Total benefits. Then net cost. Net cost of factoring. Cost minus benefits. Net cost of factoring. And finally effective cost of factoring. Effective cost of factoring, which is 9.2. He has charged us 9,27,200 in a year by giving us this money 67,23,200. Effectively, it's like a bank loan with certain extra benefits. So those extra benefits, extra cost we have removed. So net, this is what I am paying to him. %13.79% is what I end up paying to this guy. If a bank loan is available at a rate lower than 13.79%, I should go with a bank loan. If bank loan is higher than 13.79%, I should go with a factoring arrangement. Any doubts on this? Exactly the same format, do question number 2. You just need to fill figures. The format is exactly the same. Do question number 2. This is revolving per annum. Every year, every quarter will be because this amount is same. So today 67,28,800, tomorrow 67,28,800. They are so on an average the value is 67,28,800. So I have multiplied the 4 with the function for your interest for your technically is for you. The money rate is also for you. When I say technically it's for you, when you go to a bank and get a cash credit limit, today you draw down the limit. Then you keep reducing, keep going up, keep reducing, keep going up. So going let's say for a period of 3 months. After 3 months you hope you will give you another 67,28,800. Will remain stagnant. So when you use 67,28,800, you get all this. Just a minute, I'll explain that maybe risk with recourse. I'll explain. Now, what does that risk with recourse mean is that when you calculate your bad debt, last problem savings and bad debt was 1.5% of sales. This time savings and bad debt is not going to be the entire amount. Savings and bad debt is 1.75% of sales into only 80% because 20% bad debt has to be absorbed by me. With recourse means whatever bad debt happens, 80% will be handled by factor, 20% the company will continue to incur it, which means my saving can't be the entire amount, my savings will be only 80% of the bad debt. What will you take as turnover? Yeah, 4.8 plus 25%. Take same 3. Okay, the question itself has told about 360 days. Your bad debt saving alone will be 20% less. It will not be the entire savings. The effective cost of factoring works out to be 14.77%. It's exactly the same format. Can you proceed? Complete this. Let me know in case there's a doubt. Can you proceed? Any doubts on this? 16%, 5.28. Are you getting a different number? Which number is it? Don't see this calculation, that's for the last one. Into 360 by 90. I said no, it's exactly the same thing. You need not change any of the calculation. Can you proceed? Any doubts in this? Clear? Go through question number 3. Okay, now please listen. As far as factoring is concerned, there could be 3 types of problem. The first type is which we have seen, wherein the factor lends money. In this question, is the factor lending us any money? No, that is okay. Is he lending money? Is he giving us some money? Is he giving us any money? No. So the factor in this case is not playing the role of a banker. Banker means he lends money. Here factor plays only those allied role. When I say allied role, you are going to analyze these things: commission, interest cost and savings in administration. Interest cost will not be there. Commission, savings in administration cost, savings in bad debt, if at all some other benefits is there. Finally, after doing a cost benefit analysis, if there is a benefit, we go ahead. There is no concept called as effective cost of factoring. Basically, that's what I wanted to explain. Let's start with the question. Cost benefit analysis of factoring arrangement. Cost benefit analysis of factoring arrangement. No. Should the company enter into a factoring arrangement? Is considering engaging a factor. Yeah. Now, if I read the question, the collection period is going to come down from 80 days to 60 days. What is the use of this? $80 days to 60 days. What charges payable will be less? That is one thing. Savings and bad debt. That is fine. I am asking about 80 to 60 days. No money lent. Factor is not lending money. You will save interest cost. Basically, what is going to happen is, earlier you had 80-day receivable, you need 80 lakhs of bank funding. Now you have only 60 days of receivable, you will need only 60 lakhs of bank funding. I'm not sure on the exact figure, but broadly this is the calculation. When I save collection period, I save on interest cost. So capital A benefits, particulars calculation amount. Calculation amount. Capital A benefits. Now in benefits, point number 1, savings in interest cost. Savings in interest cost. We will calculate the figure in some time. Let's first broadly build the structure. Second is savings in bad debt. We'll fill the figures in some time. Any doubts till now? That is point number A. What is the use of point number B? One is savings in administration cost, and capital B cost is factoring commission. Savings in interest, bad debt, administration, and there is a factoring commission. Savings in interest, bad debt, administration, and factoring commission. Now tell me the bad debt saving. Let's write the easier ones first. Okay, what is the use of point number C? Point number C. For the purpose of calculating interest, okay, that's of no bad debt, all those calculation, it is neither a saving nor a cost, okay. So tell me the savings in bad debt. One crore into half percent, 1 crore into half percent, 100 lakhs into 0.5%. It will turn out to be 50,000. Administration cost, what's the saving? 1 lakh. How much is the factoring commission? 1 crore into 2%. These are simple things, I'm not explaining much. I'll explain only on that interest part. Can you go to the interest part? Okay, now please listen. Today's debtors is 1 crore into 80 by 365. We are not going to write any of this, I don't need it, I am just explaining the concept. Later on it will become 60 by 365. This is what is going to be reflected in my asset side 80 days and 60 days figure. Any doubts on 80 days and 60 days figure? Now please listen. what is going to finally happen is, though in the receivable it looks like 100 rupees, but against that cost is how much? 80%. So the money which is really blocked for me is only 80% of this. Though the receivable is looking high, but the money which is blocked for me is only 80%. Where is the balance 20%? That will be in the form of profit and loss account. So on the liabilities asset side you will have 21 lakh. In the liability side 20% will be in the P&L, profit and reserves and surplus. Balance 80% will be in the form of bank loan. So my net reduction in bank loan is this. My bank loan will come down by this much figure. As of now 21 lakh, of that 17 lakh is a bank loan. 16 lakh of that 13 lakh is a bank loan. Balance is in the form of reserves and surplus. In short, it is not my expense. So now please listen. Savings and interest cost is 100 lakhs into 80% into 20 days by 365 into 20 days by 365 into what rate of interest? 15%. This is the savings for the company. The savings for the company is 100 lakhs sales into 80%, because 80% is the amount of money which is blocked. Of that 20 days is the reduction. This number which I am going to calculate here will match with this into 0.15, 65,753. So the calculation is into 0.8 into 15% into 20 by 365, same number, 65,753.4. Clear? Able to understand this? So whenever receivables come down because of a factoring arrangement, that's a kind of a saving for us. Clear? So total benefits, total cost, and tell me the net cost. If it's beneficial, if it's net benefit, go ahead. If it's net cost, don't go ahead. Put the total benefits, total cost, and net benefit of factoring is so I'll go ahead with a factoring arrangement. I'm saving money. I'll go ahead with a factoring arrangement. Then please go through question number 4. You don't want fan? Now coming to question 4, they have given a forecasted financial statements of the company, and they have mentioned in the question saying that some factor has agreed to come to the company, and he is saying that he will collect the money in 35 days. XYZ has agreed to manage the receivables. XYZ has offered to reduce the average trade receivables of ABC from its current level to 35 days, reduce bad debt from 0.9% to 0.6%. So he's saying I'll reduce bad debt, I will also reduce your receivables, and I'll also save 40,000 per year in terms of administration cost. He is saying he will make an advance of 80% of the revised book value. He will be charging some 7% interest. He will charge a fee of 0.75% or 1.25%. Assume 365 days in a year and all sales and purchase are on credit. You are required to evaluate the proposal of XYZ FinCorp. Now please listen. When we did problem number 1 and 2, nowhere there was a talk saying that receivables days will come down. If receivable days are coming down, then I'll have to do analysis like this. That is, I'll have to find out what are the savings, what are the extra cost. Clear? Any doubts on this? Working note 1, calculation of reduction in receivables. Calculation of reduction in receivables. Particulars, calculation amount. Calculation of reduction in receivables, particulars, calculation amount. Amount in bracket you can put in thousands. In thousands. Point number 1, existing receivables. Existing receivables. How much is the existing receivables? 3,500. Existing receivables 3,500. Proposed or expected receivables. Expected receivables 21,300 into 35 days by 365. The question has clearly said 365. 21,300 into 35 by 365. Any doubts on this? Reduction in receivables. So he is reducing our receivables, so he will help us in reducing the interest rates also. So interest cost will come down for us because receivables are coming down. Existing, expected, and reduction in receivables. Any doubts on this number? Clear? Can we proceed? Cost benefit analysis. Particulars, calculation amount. Okay, sorry. Particulars, calculation amount will have two columns: with recourse and without recourse. What is this? I'll explain as I do it. Amount will be two columns: with recourse and without recourse. With recourse and without recourse. Let's note down whatever benefits we think about, whatever cost we think about, and then we'll calculate it. What are the benefits of the factoring arrangement? Okay, savings in administration cost. I'll write the figures in some time. Savings in administration cost. Savings in bad debt. Savings in bad debt. What else? Any other benefit do you see? Any other benefit? What was the purpose of doing that working note 1 then? Savings and interest cost. There is going to be a savings and interest cost. I'll explain this in some time. It can be saving, it can be extra cost also, but let's note it down. Savings and interest cost. Capital B, costs. I see only one cost being there, which is commission. Interest is charged, but there will net we are going to save something, so I'm not noting down interest as of now. Let's quickly capture savings and administration cost. How much? 40. We are doing it in thousands, so 40 is the savings. We are doing the problem in thousands. Now please listen. With recourse factoring means in case there is a bad debt, the factor will come back to me. Without recourse means factor will take care of the bad debt. What is the existing bad debt? 0.9%. He is anyway going to reduce it to 0.6. Anyway going to reduce it to 0.6. So now please listen. If it is a with recourse arrangement, the savings is 21,300 into 0.3%. Because from 0.9 he will bring it down to 0.6. If it is without recourse, 21,300 into 0.9, entire 0.9 will be saved. If he is not going to come back to me, entire 0.9 is saved. If he is going to come back to me, at least 0.3 is saved and 0.6 will continue to be incurred by the company. Because he is saying, I will reduce your bad debt from 0.9 to 0.6. That is my guarantee. So even that 0.6, you want me to bear it, I will bear it, but then it will be without recourse arrangement, wherein I will charge an extra commission. Clear? Able to understand this? So this is the savings in case it is with recourse, without recourse, and with recourse is 0.3%. Clear? Now I'll come to the interest cost in some time. Commission in case with recourse arrangement, how much is the commission? How much? 0.75%. And without recourse means he's going to charge it higher. With recourse is 0.75%, without recourse is 1.25%. 0.75 and 1.25. Can we proceed? Okay, now please listen. Before calculating the savings and interest cost, today my receivable is 3,500. Okay, against this I would have taken an overdraft, and what interest rate I am paying on overdraft. This is today's scenario, 7%. Clear? Tomorrow what is going to happen is this factor will come. He says this is what the receivables will be. In that he will fund only 80%. He will fund only 80%. He says XYZ would also make an advance of 80% of revised book value of trade receivables. The interest rate would be 2% higher. So on that 80%, he is going to charge 9% plus balance 20%. I have to again take a bank loan. Because earlier I needed 3500,000. Bank gave me 3500,000. Now I need only 2042. In that factor is giving 1600. Balance 400 bank has to give me again. Able to understand this? Earlier 3500 is your receivable, 7% interest from bank. Now it is only 2042. So you take 80% from bank and 80% from factor and 20% from bank. Bank is going to charge what rate? This is my net savings. But how we are going to calculate this is, we are now going to calculate like this. Savings in interest cost is reduction in receivables into 7%. Whatever receivables got reduced, that is my savings. And extra interest cost. What is this extra interest cost is? Earlier I used to take a loan only at 7%. Factor is giving a loan at what? 9%. So whatever money factor is giving, this into 0.8. This is the money the factor is giving. Into 2% is the extra cost he is charging. My net savings in interest cost is 69.35. Net savings is 69.35, but we don't calculate this way. This will become little difficult to calculate. It may take more time. Easier way is whatever is the reduction in receivables into the existing rate is the saving, and whatever money the factor is giving into the additional rate is the extra expense. Because earlier that would have come at a lower rate. Now this guy is asking for a higher rate. So savings in interest is reduction in receivables into 7%, and extra interest cost is amount lent into 2%. Whatever amount the factor is lending into 2%. Clear? Do this and then finally tell me the net benefit. Whatever is the reduction in receivables, that will get saved at the rate of 7%, and whatever is the which one? 2%. 2% on amount given by factor. The factor will give 80% of expected receivables. 80% of this number, 2042.47. He is not going to lend the entire amount. He is going to lend only 80%. If you've understood this, do question 5. Exactly similar. It will take 5 minutes. Still worth spending that 5 minutes. It's a practice problem, but I want you to do it. Do question 5. Net benefit has to be written. I have not written. No, you will have to write. Based on the net benefit only, you will decide. Total benefits. Total cost. Net benefits. So I'll go ahead with a without recourse arrangement. We'll go ahead with a without recourse arrangement. Do question 5. You will have to do a similar calculation. Yeah, only one scenario. There's no two scenarios there. Calculation remains the same. It's but a single scenario. Same format. Interest? No, which one you're saying? Interest saving or extra interest? Savings is into 5%. Because that is the interest rate which the company is paying. The average variable overdraft rate is 5% per annum. So whatever is the reduction in receivables into 5%. 80% is for extra interest. Extra interest cost is amount, revised receivables into 80% into 2% is the extra interest. Any doubts on this? It's exactly the same thing. I don't have anything to be explained also. Correct. Is this 46.11 okay? Into 30 by 365. 561 into 30 by. So reduction is 22.89. On that reduced, 5% is the savings. Because the overdraft rate is 5%. .14 lakh net benefit. Can we proceed? Any doubts on this? Your savings is 1.14 on the interest side, extra cost is 0.74, 0.74. Extra interest cost is whatever money he has given, that is 80% of, okay, into 2%. Why 2% is he is charging 7 and I was earlier taking at 5. So extra interest is 2% on the money which is lending to us. So he is giving 46.11 into 80% into 0.2 into 0.02 into 80% into 2%. It's exactly the same thing. So the format is same. You'll have to follow the format and you get to the answer. Any doubts on this? Clear? Go through question 6. Okay, now here I have to do a comparison between two proposals. Again, I will go into a cost benefit analysis route. Proposal 1 is to go with a factor, proposal 2 is to go with an insurance agency. Now proposal 1 factor. Can you tell me what are the extra costs due to the factor? Read the question, let me know what is the extra cost due to the factor. Commission. Extra cost due to the factor. Which one? Is it extra? Read it and let me know. Commission is one extra cost. Which one?
Two opposite, that one should compare or existing and
Obviously existing. Your comparison will always be with existing only. Interest savings is there, no cost is there. He is charging MIBOR plus 1.75%, whereas we were taking at MIBOR plus 2%. Any reduction in receivables? Like previous problems where he said I'll reduce the receivables and all. If not there, it's okay. Anything given in the question? Okay, now please listen. Cost is only commission. Benefit is saving in administration cost, savings in bad debt because it's a non-recourse agency, so you will save bad debt. And third one is savings in interest cost. What is savings in interest cost is whatever money the factor is giving into 0.25%. How 0.25 is? Today we are paying MIBOR plus 2. Tomorrow we will pay MIBOR plus 1.75. So we save 0.25%. Clear? No reduction in receivables, nothing. So cost benefit analysis, cost is commission, benefit is savings in administration charges, savings in bad debt and savings in interest cost. What about insurance company? What do you spend and what do you save? Extra cost and saving. Premium is an extra cost, okay. Interest saving is there because he is giving it MIBOR plus 1.5. Then savings in bad debt, okay. Can there be savings in collection expense? Administration charges? No. Insurance company role is not to collect money for you. The insurance company says, I will cover the risk of bad debt. That is the only role the insurance company is going to play. Clear? Any doubts on this? Working note 1, calculation of existing receivables. This amount will be required to calculate the interest saving. We'll do it in lakhs. Calculation of existing receivables. Yeah. Anyway, receivables are not going to come down. Basically, calculation of receivables. Particulars and amount. Credit sales. My receivables will be only on credit sales. Credit sales. What are the credit sales? 50 crores of the 20% is paid in advance. So my credit sales is 4,000 lakhs. Credit sales 4,000 lakhs. Credit sales 4,000 lakhs. Average collection period. Read it and let me know. Read it carefully. How much? See, the rule is 60 days. But what these guys are doing is they are paying 18 days delay. So net it will take me 78 days to collect the money. Average collection period is 78 days. Customers are not paying on time. We can't do much about it. Then receivables. This into 78 by 360. Any doubts on 866.67 lakhs? Clear? Next, cost benefit analysis of two proposals. cost benefit analysis of two proposals. Particulars alternative 1, alternative 2. Alternative 1, alternative 2. Capital A benefits. Alternative 1, alternative 2. Capital A benefits. I'll write the benefit, you calculate and write into the appropriate one. Savings in administration cost. Whichever column it is applicable, you write it there. Savings in administration cost. How much is the savings? Which alternative? No, insurance company cannot save us collection cost. Insurance company role is just to cover your risk. So second is an insurance company, they are not going to come and collect money for us. But a factor will collect the money for us. That is why he is charging 2%. Insurance guys are charging only 0.45%. So savings in administration cost in case of alternative 1 is 60, alternative 2 0. Then savings in bad debt. Read it and let me know the figure. Savings and bad debt. Bad debt will be only on credit sales, not on total sales. It will be only on 40 crores, not on 50. Just a minute. Okay, in case of alternative 1, it is going to be 4,000 into what is the bad debt percentage to? Point. And in this case, the saving is going to be 85% of this. Balance 15% risk I have to continue to bear. He is saying 85% risk of non-payment will be covered. The third one, if you calculate it correctly, you have understood major chunk of it, savings and interest cost. Savings and interest cost. Understand it properly and then try doing it. That will be the most critical one. Can you tell me how will you calculate alternative 1 ka saving? Alternative 1 saving. Now how will you calculate? Just show me the tell me the calculation. I don't want the amount. Okay. ठीक है. That's okay. So tell me the calculation. Is it into 1000 into 10 into 5 whatever that? Just tell me how are you calculating it? In no. It's not 866.67 into 0.25. No, calculation. Tell me, how are you calculating? Okay. Yeah, so it is basically 866.67 into 80% or minus 20%. He is not going to lend us the entire amount, into 80% into 0.25% is the saving. Into 80% into 0.25% is the saving.
It was because of the withholding critics.
Yeah, correct.
Which one separately? They should give the.
No, so why will I save interest on the entire amount? I'm not going to save. No, balance 20%. I'll continue to take a overdraft from bank where I'll pay 8%. So there's no saving there. Saving is only in the money. See, last problem when we did, extra cost was only on the amount which he lent. I did not take it on the entire amount. We took the amount which he lent and then calculated it. Similarly here we will take on the amount which he is giving us. And in case of this arrangement, it is 0.75, 75%. He is giving only 75%. Then put the extra capital B cost, net benefit, and then decide. So finally you can select which alternative is to be selected. Alternative 1 will go ahead with that. So the saving is not that high, but still we'll go ahead with alternative 1. As compared to alternative 2, we don't see major difference. Alternative 1 has a relatively higher saving, we go ahead with that. Any doubts on this? Clear? Can we proceed?
Yes, alternative 2 has a better option. That's the alternative 1 provides a lot more. It doesn't say they cover.
No, but what is the point? I'm paying 80 lakhs for that. No? So net benefit, if alternative 2 is better, I'll go ahead with alternative 2.
It doesn't matter what all they cover.
That doesn't matter. No, see, the point is, in alternative 1 I save 80 lakhs, 60 lakhs in administration, but I end up paying that in the form of commission. So whether I want to save that or not, it's just a choice which I have to make. Clear? Can we proceed? Go through question 7. Go through question 7. Okay. Now coming to this question. There's a company which has been managing its receivables internally. Internally means they were managing on their own. Now they're thinking of giving it to someone else outside also. They have a credit policy of 2 by 10 net 30. Now I'll explain what is 2 by 10 net 30 means. Get a 2% discount if you make the payment in 10 days. Otherwise make the payment in 30 days. Get a 2% discount, 2 by 10, 2% discount if you make the payment in 10 days. Otherwise make the payment in 30 days. This is the policy of the company, 2 by 10 net 30. But what has been happening is 40% people pay within 10 days and balance people take on average 90 days. So I tell them you have to pay in 30 days. These guys are taking 90 days for making the payment. Some bad debt data is given and sales data is given. Now they are thinking of giving it outside. So outside they have got proposal from two people, Fine Bank Factors Limited and Rough Bank Factors Limited. Fine Bank Factors Limited says he will advance so much in with recourse, without recourse, commission, all those data is given. The opinion of the chief marketing manager is that in the context of the fact, his staff would be able to exclusively focus on sales promotion, which can also result in additional sales of 10%. Kindly advise as a financial consultant on the alternative proposal. What advice would you give? Why? Now, in this type of question, I cannot do a cost benefit analysis. I'll straight away do something called as today's cost, proposal 1 cost, proposal 2 cost, proposal 3, totally 4 proposals are there. Whichever proposal has the lowest cost, I go ahead with that. Clear? Any doubts on this? Working note 1, calculation of amount lent by factor. First, calculation of amount lent by factor. Calculation of amount lent by factor, particulars and 4 options. Particulars, the 4 options which we have is Fine Bank with recourse, without recourse, Rough Bank with recourse, with recourse and without recourse. Fine Bank, with recourse, without recourse, Rough Bank with recourse and without recourse. Sales, we'll do the problem in crores itself. Sales, This amount lent by factor will be more or less whatever we have done there. Why I calculate this is to calculate interest cost. Sales. Read the question carefully and let me know the sales. 1100 crores, 10% increase will be there. 1100. Sales 1100. Crores, yeah. Sales 1100. Credit period. Read it carefully and let me know. Factor has said he will collect the money in 30 days. Credit period 30 days. Receivables 1100 into 30 by 365 I am doing. 365, 360 your wish. Receivables is this figure. Any doubts on this? From receivables, what do you deduct? There's nothing in the question. Remember the format. Less commission, less reserve, amount eligible, less interest, amount actually lent. So less reserve, less commission. Every proposal has different figure. Calculate and write it. Less reserve, less commission. $21, no?
Discount charge is considered as well.
No, sorry. Yeah, correct, sorry. Not discount charge, sorry. This is,
88, 80.
correct. 16%. This is 12%. With recourse is 16%. %20. Which one? Commission 4.5% of receivables. So commission is without recourse is 4.5, 2.5, 4.5. Commission 4.5% without recourse and 2.5% with recourse for fine bank factors. So for option 1, it is 2.5% of receivables. Fine bank with recourse. Now after this we charge something called as interest. That interest is nothing in this case but the discount charges. The discount charges is the interest. So for example, for the first proposal with recourse, this into what is the interest rate? 21% with recourse, 21% into 30 by 365, interest for a period of 30 days. B10, that is 73.68 into 21% interest. Any doubts on the 21% interest? Discount charges in advance, that is the interest, into 21% into 30 by 365. Any doubts on this? Clear? Calculate this. Commission is on receivables, and then we do into 365 by 30, it becomes on sales. So problems which we done here, when we calculate initially commission, we calculate on receivables, but indirectly what happens afterwards, when you do into 360 by 90, the indirectly becomes on sales. So that is a full year cost. We are now doing only 30 days ka calculation, so that's why it's on receivables. Any doubts on this? So 1100 crores is going to be the sales. In my asset side, I have a receivable of 90 crores. Factor is saying I'll pay only 72 crores. That is what he has decided to pay us. Any doubts till now? Any doubts till now? Clear? Now please listen for some time. Calculation of cost of different proposals. So we have 4 proposals. We are going to calculate the cost of all of these 4 proposals. Now please listen. Commission cost, interest cost is very simple. I'll do this rule only. I'll take the commission cost, whatever I have paid here, into 365 by 30. What is done there is for 30 days. I'm multiplying with 365 and dividing by 30. This is my commission cost. Interest cost is this into 365 by 30. We will not take any concept of savings and all, no bad debt saving, nothing will be calculated. That will be compared separately with another proposal. So let me complete this, then you'll understand. So commission cost, interest cost. Are there any other cost associated with factoring? Only cost, no talk of benefit. Any other cost do you see? There's one more cost which is there. Okay, now please listen. This is first time you're going to do, please listen. Interest on balance receivables. My receivables in books are 90 crores. I go to the factor, he says 72 crores. Balance, what I will do, I'll go to the bank and take a loan. Or balance, I'll have to fund it on my own. So now please listen. There is going to be an extra cost which is 90.41 minus 72.41. 90.41 minus 72.41. This money I will have to take a loan at the rate of, now please listen, Beanstalk finances its investment in debtors through a mix of bank credit and own funds in the ratio of 70:30. So as of now I have been funding my receivables in the ratio of 70:30. Can you do a weighted average and tell me? Bank credit is 70% at 13% rate, own funds is 30% at 15%. Bank credit and own fund mix is 70:30 and their individual cost is 13 and 15. What is the weighted average? Weighted average. Put together. Today the cost is 13.6%. So I go to the factor, ask him money. He says I'm not giving. I'll take the money in this form and I'll end up paying 13.6%. I'm not considering any savings. I'll come to the savings part and see. Why we are not considering savings, I'll explain in some time. Any doubts in these figures? Okay, sorry, one more thing is there. Bad debt cost. If there is no recourse, I'll continue to incur bad debt. If there is a recourse, I'll continue to incur bad debt. So option 1 and option 3, we are going to continue to incur bad debt. I'm not coming to savings. I'm going to do only from a cost point of view. Let me complete everything and then I'll explain. In option 1, I'll continue to incur bad debt. What is the bad debt rate the company is currently having? 1.5%. So 1100 crores into 1.5% is gone. 1100 crores into 1.5% is gone. Okay. Now I'm going to compare this with in-house management. My comparison is going to be with in-house management. I am not going to do a cost benefit analysis. I am just going to do a comparison with in-house management. Particulars, amount. Today, first thing I incur is bad debt. Bad debt. What percentage is the bad debt? 1000 crores into 1.5%. I'll come to an issue which is there in the question in some time. 1000 crores into 1.5. Second thing which I incur is cash discount. 1000 crores. How many people apply for cash discount? 40%. And how much discount do I give them?
2%.
So this is another expense for me. 8 crores goes in the form of cash discount. Sales administration. 10 crores. This is another expense for me. Interest cost. Now today, can you tell me what will be the average receivable days today? Reading that question, what is your sense? Average receivable days. 40% people pay in 10 days, 60% people pay in 90 days. What is that? 58. See, some people are paying in 10 days, some people are paying in 90 days. On an average, 58 days receivables is there. Let the factor do whatever he wants to do, but as of now, my interest cost would have been 1000 crores into 58 days by 365 into 13.6%. Into 13.6%. Listen for some time. And this is the total cost. Today I am spending 54 crores on managing my receivables. These four proposals talk about 61, 68, 53 and 57. I'll go ahead and select this. I'll go ahead and select this because this is where the cost is lower. I spent 53 crores, whereas today I've been spending 54 crores. How 54? Bad debt, cash discount, sales administration. In a typical problem, these four things would have come as benefits. It would have come as benefits and you would have calculated net benefit. So if you have to follow that route, then benefit minus the cost is the net benefit. Benefit minus the cost is the net benefit. So every proposal, what is the net benefit is this number. If at all I have to calculate net benefit. Every proposal, the net benefit is this number. Why I am not doing? There are certain issues with the question. Now, institute material, they have talked calculated bad debt for today on 1000 crores, whereas ideally that should have been on 1100 crores. Because my factoring arrangement, everything is calculated with 1100, and this if I calculate with 1000, obviously this may look better. Or if you want to calculate with 1000, perfectly fine. For that extra 100 crore of sales, they should have given me how much more profit do I make, because that could have been a benefit under a factoring arrangement. In a factoring arrangement, my sales go up by 100 crores. When sales go up by 100 crores, obviously my profit will also go up on that 100 crore sales. So I would be making extra 2 crores, 5 crores, 10 crores, whatever it is. So that item ideally should have been in the cost, a negative cost called as contribution on extra sales. That is a negative cost, which is indirectly a benefit for the company. So commission into 365 by 30, interest into 365 by 30, interest on balance receivable is what I need minus what he lends into 13.6. How 13.6 is a weighted average? Any doubts on 13.6%? Any doubts on 13.6%? Then you have bad debt, which will be there in alternative 1 and alternative 3, because these alternatives are with recourse. In a with recourse alternative, you will continue to incur bad debt. This is the amount I incur for all the 4 proposals, and I am comparing it with this. Finally, after concluding all of this, I say that I'll go ahead with alternative 3. Clear? Any doubts on this? Now do it. Please do it now. Instead of going by a savings approach, we are going by a cost approach. Which interest cost? No, so no, which one? Other interest or normal interest? This one into 365 by 30. Whatever you are writing here, whatever you write here into 365 by 30, because this is for 30 days. Into 360 or 365. What is the problem? Silent. No, so I have taken 365 and now. Balance is you want 90 crores, you get only 72 crores. So 90 minus 72 into 13.6%. Into 13.6%. Weighted average 70% into 13 plus 30% into 15. Which one? After completing this, I would want you to do question number 8 in the similar fashion. I would want you to do that. So complete this. Finally, we'll conclude saying that we'll go ahead with proposal of rough bank factors with recourse. Rough bank factors with recourse, and then you do question 8. With all this, so there are 5 options. You can understand it as 5 options. Whichever has the lowest cost, that option you take. It could be in-house also. The lowest, if in-house, I take in-house. Net, there are 5 options. Do question number 8. In this, we selected alternative 3. Go ahead and do question number 8 in similar fashion. Go ahead and do question number 8. Interest cost. In last question. Into 58 by 365. 58 is weighted average of 2 by 10. So within 10 days 40% people pay, and then balance 60% people pay in 90 days. Within 10 days 50% people pay, and then balance people pay in 90 days. There is a little bit of a change in this question. Calculation will be 360 days. Are you getting this amount? Amount lent by factor. 1100 crore sales. 30 days credit is what they are agreeing on. Guaranteed payment of 30 days. Receivables is into 30 by 360. Then commission, whatever percentage is talked about in the question. There are certain changes, small changes are there. So that I want to take you through. Just let me know whether you have got this amount lent correctly. Till now there are no changes in the calculation. It is more or less the same thing. Amount lent, I'll take you through balances, get till amount lent. Complete till amount lent, then I take you through the balance part. I'll take you through the balance part, get till amount lent. If you are done with this, then I proceed to the balance part. Can I proceed? Okay, now please listen. There's extra bit of adjustment which is going to come in here. The format broadly remains the same. Now I'll listen for some time. Bad debt is 1000 crores into 1.5%. This is my existing bad debt. 1000 crores into 1.5%. Cash discount is how many people are taking cash discount? So 1000 into 40% into 2%. Sales administration cost 11 crores. My interest cost is 1000 into how many days? Can you tell me the weighted average? 40% people pay in 10 days, 60% people pay in 70 days. 10 days, 2 by 10. And balance people pay in 70 days. 46 days into 46 by 365. Listen for some time. Into 46 by 365. And adjustment here is my receivables is not this. My receivables is 80% of this. Whatever I calculate, listen for some time. 1000 into 46 into 365. Okay, let me calculate this. 1000 crores into 46 by 365. This will be my receivables in book. But I will need a bank loan only for, or I'll need funding only for 80% of this. Because 20% is profit. 80% is only the funding needed. What is the cost of funding? Tell me the weighted average. 60-40. What is the cost of funding? 13 point? It can't be 13. 10 and 12. No, it has to be in between. $10.8 is what I see. Okay, so now please listen. My interest cost is 1000 crores into 46 days into 80% into how much percentage we got? 10.8%. 10.8 only. Okay, any doubts on this? This is what my in-house cost is. Same thing, the only change is on interest part. Interest part you will take only on 80% because the cost is only 80%. Cost is not 100%. Wait for some time. Commission, same logic. What is written here is for 30 days into 360 divided by 30 days. Clear? What is written there is for 30 days, you into 360. Interest similarly into 360 divide by 30. Clear? Okay, now please listen. This is the most trickiest part. Interest on balance receivables. My need is not that, is only 80% of that. Because my costing is 80%, profit margin is there. So that factor doesn't know. Factor thinks the calculation and he says he has to give 80% of it. So we did this calculation and factor has given us this much. So net factor is giving more money than what we need. Factor is giving more money than what is needed. So this is going to save interest for me. Instead of balance receivables, me paying interest, 10 point what percentage was the cost? 8. So last problem what we did was, we took this minus this into 10.8. Same thing, this minus this number only, but 80% of this you will have to take because your cost of funding is, your cost of receivables is only 80%. So what happens is, balance interest is 80% of receivables minus amount lent by factor into 10.8%. Any doubts on this? There is a gross profit margin of 20%, which means my cost is only 80%. So though in my books of accounts receivables will be 91 crores, but the real requirement for me is not 91 crores because 20% is sitting in the form of profit and 80% is only my cost. 80% is only my cost. So what they are saying is, your receivable requirement or funding requirement is only 80% of 91.67, but this guy is giving you 74, which is more than what you need. Because factor is not aware of what profit I make. So indirectly what happens is giving me more funds, so it is helping me in saving some interest. So that is why into 10.8%. Any doubts on this? Any doubts in this? So there is no balance interest because he is giving me more than what is needed, but the factor doesn't understand about because he is not aware of the profit margin. Bad debt alternative one is what? With recourse, without recourse? With recourse. So I'll continue to incur bad debt. 1100 into what percentage?
1.5.
And only one more item is incremental contribution minus 20. This is the benefit for me because my sales go up by 100 crores. When sales go up by 100 crores, I make extra 20 crores of profit. This was missing in the last question. Ideally, this should have been given in the last question. It would have become a perfect problem. This information was missing in the last question. So I have calculated my cost for 1100 crores, but when I calculate for 1100 crores, I have to give that benefit of clear. Any doubts in this? Complete this. Last problem also I wanted to write that contribution part, but it was missing in the question, so we couldn't do much. The difference between last question and this question is interest is calculated on 80% of receivables, not on the entire amount. Always take the first working note into 360 by 30. Interest cost and commission cost is what you calculated was for 30 days into 360 by 30.